Hi there, traders. This is Brad Gilbert with the FX Market Insight for Wednesday, the 20th of May. All right, coming out of the North American session, equity markets gave a little bit of cash back from the previous day's moves. As probably expected, okay, the initial euphoria of a potential vaccine for the virus was always going to be a bit of one of those, like the boy who cried wolf, you get that first reaction, very strong. And that's sort of fading now. The dollar index, you can't really tell with the price gyrations here in the dollar index, probably because of the spread across, the number of different pairs in the basket. But if I give you a look at the currency pairs, now I was sort of pretty keen for the Aussie to dip down after this initial spike. Looked pretty good coming through the Asian session, but at the start of the European session, we saw just a run of probably stops, US dollar selling, and we saw these currencies move to the top side once again. Euro probably hasn't found the top just yet, but Kiwi looks like it has just for the moment. We did see some good machinery orders out of Japan, give dollar yen a slight little boost, but you know what? It's pretty lackluster. Sterling, it's doing its best to slowly climb out of the gutter, and dollar CAD, a nice little bit of a retracement there. Probably not enough to get into that trade up around 139.80, but initial sort of pullback. Now, there's various reports out about that vaccine story, and some have been saying that it was not untrue, but not as successful as first thought. But the market has brushed that aside and is now focusing on just the geopolitical side. Munchin's been out there sort of talking his head off. There's my good friend Mario in the background. Must be an old photo. And that's where we are. So if you come back and look at the major pairs, you can tell by the price action that there's been no real news. So the currencies have found fair value for the moment, okay? And the price action here is a little bit muddled up and down. You'll see that on most of these pairs. And that means the market is sort of unsure about what's going on right now, and they're waiting for the next level of price activity or momentum to come back into the market. Okay, we've got trend lines, but we don't have clear momentum. And that's something you really need to put your cash in the market, right? So don't forget, this is about methodical trading as opposed to sort of gambling, looking for a quick fix. All right, so just coming back into the FX Daily Market Insight for today, the majors are trading technically quite well. You just got to be patient and wait for the opportunities to develop. The Kiwi, noticeably, probably the best opportunity yesterday, if you were patient enough to wait for that, for it to rally close to that resistance line. Active pairs, well, I tell you what, going back into the sort of rule book, going with the general trend. Now, if these pairs, short-term and daily trend lines have both broken, the euro's broken up on both, and dollar CAD's broken down on both, the smart play really, without trying to second guess your overall thoughts, too deeply, you should be going with the trend. So buying dips potentially on euro and sell rallies on dollar CAD makes a lot of sense. The other pairs at the moment, I still like, they're still in a sideways activity because they haven't broken through mainly on the longer term charts, like the daily charts. They've broken higher, of course, on the hourlies, and that's where you get the momentum. But longer term, they still aren't up. To me, until they break through those longer term trend lines, I'm looking to get short Aussie, Kiwi, and sterling for the moment. Dollar yen just waiting out. If you're looking for an indication of, like, take out the noise out of the market, check out dollar Swiss. It is trading quietly in a very tight range, and which tells me like there's nothing really going on. What we're getting caught up in is the noise of the geopolitics being released sporadically. Of course, traders are gagging for opportunities because there's been a few and far between, and that's what we're seeing at the moment. So it's probably a time just to relax, wait for the trades to build up. As I said, we've got trend lines, but we haven't got momentum. And that's what I'm sort of waiting for, clearer momentum. I still think the US dollar has a big chance to make a big run, but we need to wait for the news, the geopolitical news about the impact of the rollback of the lockdowns, whether this vaccine is a hoax or not, et cetera, et cetera. So there's a lot of variables to come into play and a lot more negative fundamental data. Now, talking about fundamental data, keep an eye on the CPI numbers out of the UK, Eurozone, and Canada today. You'd expect those to be like terrible, but just keep an eye on the fundamental picture as it builds. Right, that's what's going to come into play once the if the geopolitical situation does at all dissipate, right? So that would be something to be wary of. That's where direction normally would come from. At the moment, we are still dealing with the randomness of the news. Okay, so just make sure you're keeping up to speed with what's driving things around. This is what traders in the market are reading. So make sure you're abreast of that and don't take it with a grain of salt, a lot of that geopolitical stuff. All right, guys, that's it from me. There's not a lot of joy. A small loss yesterday on the Aussie. Take that with the bitter pill, and we'll wait to see where these next opportunities come from. As I said, we've got good trend lines. We're just waiting for some sort of tangible news to get into things. All right, guys, have a good trade day. Cheerio.